Hello and welcome to VHTB, your guide to talent, culture, and capital forces shaping the hard tech ecosystem. My name is Justus Kilian. I'm a partner at Space Capital. We provide high conviction capital to founders transforming the real world. Today, I'm joined by Brian Mejeur at Astra Talent Advisors. How's it going, Brian?
Going really well. Excited for this conversation.
All right. And also Matt Gjertsen of Built. What's up, Matt?
Hey, how's it going, Justus?
All right, guys. So the sort of prompt for today's discussion, it sort of is encapsulated by some research that came out of JPMorgan, and they coined this acronym. It's called HALO. HALO stocks, heavy asset, low obsolescence stocks. And so this really includes anything CapEx, supply chain bottleneck related, robotics, that are more like staples. They're seeing what they're sort of articulating both in the public market and the private market is this investor rotation out of what had been the digital world and these high margin software hyperscale companies into a more physical based asset heavy balance sheet. And so they're calling them Halo. And so I think today's conversation, I really just wanted to unpack and sort of dive into why are investors suddenly so obsessed with hardware? And are there some critical blind spots that more traditional software investors are missing when they jump into the hard tech ecosystem? And given that we've all supported and worked in this domain, I thought it would be a rich discussion. So maybe we should just start. What do you guys think about the number of investors and the excitement that we're seeing around, hardware-centric companies and hardware founders?
From my perspective, I think it's like a perfect storm of a number of different things happening at the same time. I mean, I think the AI boom is causing everybody to get scared of what's going to happen to SaaS and social media. Most traditional of the software variety investments either rely on enterprise software or advertisements. And AI is threatening to dramatically disrupt both of those. We have kind of, after decades, a number of hardware companies that are finally reaching massive maturity. That could be SpaceX, Tesla, NVIDIA, a couple of those companies that it's been a decades-long game. And to many people, it's probably the kind of like overnight success, 20 years in the making kind of thing, especially in NVIDIA, where it's just like it showed up, but they've been around and working at it for a very long time. And then I think the third trend that I would say is more cultural, at least in the United States, of you could put this on kind of the Trump administration, you can put this on a lot of different places, but kind of a resurgence of the belief in the importance of blue collar workers, blue collar jobs, infrastructure, just like building things again. There's very much a cultural element of believing the importance of that. I think kind of all of those things just happened at the same time. And to me, that's what's driving a lot of this.
Yeah. And to add to that a little bit, especially that last point, I mean, I think there's more threats too. Like we're sensing stronger and stronger threats from China, there's war in the Middle East. There's a lot of people that are very feeling an urgent need to bring manufacturing back home to strengthen the industrial base and all these things. And so I think those are all like inherently hardware problems. And there's just a very clear need and like rallying cry around that wasn't present even a few years ago. That's also a pretty big one. And just like, I mean, how easy is it now to just like go into Claude Code and build software? Like, is it more of a commodity? Whereas actually delivering something that's capital intensive with hardware is hard. And people have seen now how lucrative it still can be with like SpaceX as a prime example. And so they're like, okay, the hardware is not going anywhere, even with AI, and there are real ways to make money here. And so, yeah, we're definitely seeing lots of investors like moving more and more of their capital into the hardware space and get really excited by that.
Yeah.
I did kind of want to touch on that point that like the hardware isn't going anywhere. Maybe like hardware as an idea isn't going anywhere, but I wanted to challenge, kind of get your thoughts on that initial definition that you said, Justus, of, what was it? Heavy
asset, low
obsolescence. Is it in today's world? I mean, it's certainly not as low as software, but I don't know if I would say a lot of hardware is low obsolescence. If you look at the people at the companies that are succeeding, they are constantly willing to completely destroy their entire capex. It's like, I always thought when I was at SpaceX, like one of the defining things about SpaceX is that they never succumb to the sunk cost fallacy. And I think if we, if we look at most of these places, it just, even hardware feels like it's going obsolete very quickly.
I think that's a fair observation. So I think there's a difference between highly iterative engineering cycles and then getting to that like final product where Falcon 9 has been the workhorse of SpaceX for over a decade, right? And so once you get it right, then it is a moat, right? Same with Starlink.
But like with SpaceX was, if they had their way, I think they would be winding down Falcon 9 right now. If Starship had taken the trajectory that they wanted it to take 3 years ago, they would be trying to wind down Falcon 9 right now.
But that's their choice to sort of let it go. I mean, it still has staying power. There's still a market there. I think they're willing to sort of seed that market for a bigger vision, right? But the asset itself is actually still quite valuable. It's a fascinating conversation. Yeah. I do think that there's a couple other sort of underlying components motivating investors. I think we all do still have like a pretty strong sort of shock to COVID-19 and what happened when supply chains were really disrupted during that period.
That's a really good point.
I think that's still fresh in people's memory and the cost of it. Now with increasing tensions geopolitically, our global supply chain is decoupling in a way that forces countries to be more self-sufficient. I do think in the US, like we have incredible infrastructure, but it's aging. And so a lot of what some of these new hardware companies are taking on is just rebuilding that aged infrastructure where you just had these very large companies that previously had taken it on. And you have these young founders that have a new sort of recipe, the SpaceX algorithm, a different approach to engineering hardware and an iterative COTS, approach and managing risk in sort of different ways, and sort of gives you a whole new formula for how to build things. And I think sort of the timing of that is really important. And then I do think this reversion away from SaaS into AI, like when you start to fundamentally rethink how you build product, how you build a company in an AI native environment, it does fundamentally change process. It changes headcount, it changes culture, it changes velocity, and can do things a lot faster. And so those companies are likely going to gobble up, eat a lot of those big established players because they're just not going to be able to keep pace. So much tech debt and so much sort of process debt that I think it's going to be really hard to shift beyond just the SaaS model itself. Yeah, those are strong motivators. I do think that there's quite a bit of risk to this sort of tourist capital or capital that's less familiar with investing in hard tech, CapEx intensive companies. We've been doing it for 10 years and have had sort of a couple different cycles of that tourist capital coming in. And when you start to get to this valley of death where there's just isn't revenue for the first 5 or more years, very minimal, their expectation around give me CAC over LTV and want to optimize your growth profile and like just down to the minutia of how revenue marketing dollars and engineering dollars should be spent to drive revenue growth. It just isn't that way when it comes to hardware. You're rate limited by sort of your manufacturing base, and it's a stepwise growth curve. And so, Brian, do you have any thoughts? Are you seeing like any impact of these new like investors that maybe might have some naivete coming in and what that might mean for talent in your domain?
Yeah, I appreciate the question. It feels like there's just so much excitement in the space and so much capital flowing in that we touched on this a little bit in one of our recent episodes, but it's pretty easy right now for someone with a great resume and a good idea to go raise a big first check pretty quickly without like much else. And I don't know how well that's serving the market right now to just have a bunch of companies that don't have much established yet have like a lot of money in the bank account. I think some of your points in the past, Justus, like there's not as much scarcity in there. And it also, with that many options on the market, it's just been difficult to find candidates that meet this high technical bar, that are excited by being in that stage, especially if they see that the alternative is that they can go raise the capital themselves and be a founder and have on the order of 10x the capital. or the equity. So there's a really difficult trade being made for founders trying to hire at this stage. They're like, oh, it's really easy to raise the money, and then I know what good looks like, so I can hire these people. But the reality is that those good people have a lot of options to choose from, and one of those big options is to go do what those founders just did and just raise the capital themselves for their own idea.
So are you seeing this as a problem where folks that you've worked with, they make a handful of key hires, and then 6 months later, they're coming back to you saying, we got to go fill this role again because XYZ employee they started their own company. Is this a lived problem you guys are dealing with?
Yeah, we're definitely experiencing this. It's arguably more that it's harder to make those key hires, right? If you have that really high bar and you come from a great background, great idea, you have great money, you're feeling really good and like you know what great looks like, then finding someone to meet that is like we can get those people on the phone and then they can get some initial momentum started and get an excitement built. And then they're like, yeah, but my other options are there's 5 other companies at the same stage courting me, or I could just go do this on my own for way more equity. And so it's just getting the supply is a bit too low for the demand for these seed stage companies. And the calculus for the candidates is really challenging in order to get them across the line and like get started in building the company.
Matt, have you seen that show up any cultural way with companies that you're working with, like turnover rates and starting to impact morale or a need for leadership to mature and it's just not there? I'm curious if it's showing up in your work as well.
The thing that keeps coming out to me is I was having a conversation with an engineer who they had been at SpaceX and then they left and co-founded a company with a couple other SpaceXers. And then by the time I was talking with them, that company had folded and they were an engineer at another company. And they just remarked about how they had thought that when they went out, because it was all ex-SpaceXers, like they would just have the same culture. It would just work again. And they couldn't even necessarily put their finger on why it didn't work. And I think from the point of view of investing and founding, and that's why we talk about it. It's like the talent, the culture, and the finance side of all this, because it is all of that. Those are all their own important pillars. And just because you have the talent and just because you have, if you have the talent and the money, that doesn't mean it's going to work. And I think thinking through that these are all different components that have to come together to form a successful company, I think that's something that needs to be factored in.
Yeah. I mean, one of the things that I'm seeing is some of the best talent, they know they're the best talent and they don't really want to be employees for a company. They are fascinated about solving an important problem. They want to have a voice at the table, impact strategy, have real influence, but they don't want to be locked in under a vesting schedule or a salary. And they don't have to because, they're in a pretty good financial position. And so they're picking up 1, 2, 3 engagements. Some cases they'll embed themselves and work in the company, help solve some really important critical problems. They'll work to sort of train up folks around them as they sort of scope out of their work, but they're just not willing to commit to full-time roles. And that's like how you're getting talent and filling some of like your hardest roles these days is on a more sort of contractual basis. I don't know. Have you guys seen that at all?
Yeah, for sure. I mean, especially with the SpaceX IPO upcoming, a lot of people are rethinking how they think about money and compensation and time commitments. And they're seeking a different type of balance. They feel like they've maybe kind of already done the employee thing before. So, yeah, the consultant angle is a better fit for a lot of people. Or if they're going to be that committed to a company, like they'd rather pick the idea and run it with it themselves. This is a very common dialogue we're having with these top engineers that have the like been there, done that, fingerprints in space, been successful delivering meaningful hardware. Like these are the types of conversations that they're having both like internally and with folks like us.
So the two big levers you used to be able to pull to get like really great people is aligning to a compelling vision, and people want to work on big, important, meaningful problems. And oftentimes that's how you sort of get the best engineers. They're more mission driven, or you could pull the comp lever, boost that up. Matt, I'm curious what you think on sort of vision, and Brian, I'm curious what you think on comp. Like, are those levers like effectively, are they ineffective at this point? Is time the only thing that matters for a lot of like the really best talent right now?
I think vision will always be effective. And I think it's one of the most effective ways to create these companies as well. But again, yeah, like that challenge is, and we've touched on this on previous conversations, is in order to create the bigger and more compelling the vision, then at least in some ways, the bigger the capital needed in order to make meaningful progress towards it. Not always. So you could see a world where there is kind of a quick weeding out of there's just like the small on the edge ideas that are kind of marginally improving things. Maybe they either can't attract the investment or they can't attract the talent because there isn't that big vision. But then there is still space for the really big ideas.
I agree completely, Matt. Like there's absolutely still a strong need and demand for vision. People love to work for and follow leaders that are inspiring and also that are casting a vision that they're super excited to get behind. That is still really true. The thing is, the bar has been raised for what a compelling vision looks like. Like there's a lot more companies starting that you can choose from than there was 3, 5, 7 years ago. And so just having like, this is the short-term market I'm going to go address and this short-term problem I'm going to solve, people aren't very interested. Or just, oh, wouldn't it be nice if in 20 years the world looked like this? This is what we're going to do. And then you don't have the short-term stepping stones to it. Like neither of those work. Like candidates need to see really compelling visions and stories, both short-term and long-term, to see, okay, is this the person and company that I'm going to give the next 3 to 10 years of my life to? And I think that's something, it's always been important, but I think a lot of founders right now could really benefit from like immense focus on this topic and on the storytelling and on thinking through those things and communicating those really well, because ultimately that's what pulls people in the most. And I mean, to complete your question, Justice, like comp is still a lever, but people who are at SpaceX, cash is becoming less and less of a lever. We have people asking for zero cash and just as much equity as they can get. So I think you need to be thinking, especially at the seed stage, like I've been discussing, like I think you really need to be thinking about like how much equity can you set aside for these early hires. It might need to be a bit bigger than like historical benchmarks in the current talent landscape and how quickly it's changing. Like that is probably paired with a big vision, what's going to actually get you the right people most quickly and have them bought in as employees and not just as consultants.
Well, this has been a really fascinating conversation. I wasn't quite sure where it would end up going, but I think to summarize, like my experience now, more than a decade in venture, is like it is very much a cyclical industry. And what we're seeing now, there are structural forces that are pushing capital into hardware and our tech ecosystem. There's a lot of money flowing into early stage companies that still sort of lack maybe a coherent or complete vision. And it is distorting, the hiring trends that we're seeing in the market, but they're sort of stalwarts that anchor finding great talent, which is really being able to tell a compelling vision about why this matters and where it's going and solving like big, important, compelling problems to be able to attract and retain that talent. With every sort of upswing, there's a downswing. And so capital drives hiring and drives formation of new companies. But when that capital starts to dry up, then you start to see who's been building real things and what it looks like. And so I wouldn't be surprised if in the next year, 2 years, we start to see a little bit of that contraction show up. And there could be a thinning out of the herd. But for now, it's a super hot market. You have to be able to compete. You're going to be getting really great talent. So thanks, guys, for helping unpack that one. That was really fun.